Welcome to the Investment and Pensions Fund Committee, 5th of December 2025. Welcome to those in the room and to those online. We'll crack on with straight into item 1, Chair's announcements. A reminder that this meeting is being live streamed. When you speak, please use your microphones on the table so that those online can hear. Also a reminder that for any councillors that are online, I don't think there are any, you'd be unable to contribute to a vote. I'd like to welcome Joanna Cook, who is online currently. No, she's not. She was a minute ago. I'll welcome her later when she is here. And we've already heard from Adrian, so thank you, Adrian, as well, who spoke to us as independent advisor in replacement of Anthony Fletcher. Item 2, apologies for absence. I have apologies from Carl Hearn and from Martin Brooke. Item 3, declarations of interest. And members, please declare any interests either now or at the relevant item before discussion takes place. As on the agenda front sheet, no declaration is needed as a result of having a pension or being part of the pension scheme unless something on the agenda relates specifically to your entitlement or payments. Joanna, welcome. I just wanted to welcome Joanna as a GMB union representative who is attending remotely today. Joanna was appointed to the committee before the September meeting but had to send her apologies, so welcome to your first meeting of the committee. Item 4, minutes of the meeting held on the 19th of September, and I'd like to thank actually my Vice Chair, Henry Gent, for taking over. I was unwell on that day. I did enjoy watching it on YouTube. I've enjoyed other things on YouTube more, I'm going to be honest, but I did get to watch it. So this is to agree that the minutes are correct for that meeting. No comments have been raised in advance of the meeting. Are we happy that it's representative? Can I have a proposer, please? Roberto, and seconder, Simon. Thank you. Item 5, items requiring urgent attention. None have been raised in advance of the meeting. Item number 6, the minutes of the Devon Pension Board meeting held on the 20th of October 2025. This is for comments or noting. Are there any comments in regard to those minutes, or are we happy to agree them? All happy? We need to move that. No, that's just noted. Thank you. We're rattling through this. This is good. This is because we normally go on forever, don't we? So this is brilliant. Right. Item 7, Brunel Oversight Board. The minutes of the Brunel Oversight Board meeting held on the 11th of September 2025. Again, for member comments and noting. Do you have any comments, Henry?
Thank you, Chair. I'd like to comment on item 7 of that report. Sorry, item 9, part 9 of that report. Palestine Solidarity Campaign letter on Gaza, and I'd like to comment on that in conjunction with a comment on the separate online training session that several of us attended, which was about investments in conflict areas. And I'd like to just note that I'm not sure that Brunel, in fact, I believe Brunel have not yet grasped the approach which we have suggested or has been suggested from Devon, because Brunel is still dealing with the question of engaging with companies that do business in Israel or any other conflict affected area, which is really difficult because it includes the entire stock market from Microsoft right the way across the whole spectrum. Whereas the approach that we have aired is that we should consider whether we should be invested in companies that are based in countries that have been found guilty of genocide, persistent war crimes, apartheid-like policies, etc. And so our approach that we've aired is quite different from the approach of engaging with every single company that is in this is doing business with Israel or any other conflict affected company, which it can create an enormous amount of work for ethical engagement advisors, but might not make much progress at the moment. And the approach we've aired is quite different. But when that wasn't discussed at all, as far as I can make out in the online session, and I put it in the chat, it was only responded to with about 20 seconds to go. So it was pretty immaterial discussion. So I just want to keep that on the table. I realise that Brunel, we got so much else going on. It's not at the top of the priority list. I'm not asking for a long discussion now. And we are in the next meeting going to have the response to the member survey. So that might be a more appropriate time to talk about these kind of issues. But I just wanted to note that I don't think they've yet grasped the approach that we've aired. Thank you.
Yeah, thanks, Henry. I was going to mention we've got item 14 and the fund member survey, but it's going to be a very brief note from Mark on that, and it will come to the next committee. Mark, do you have any comments on how Brunel have handled Palestine?
Well, I mean, we had a session. Actually, I think it was before the election where Brunel came and spoke specifically to our committee as well. I think the number of companies actually based in Israel that we would have exposure to is very, 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 very small. But it's certainly something that I am aware that Brunel have been considering, and I think within their active managed portfolios, that there's, I'm not sure if there's anything at all. I think any exposure we have is through passive, and that's where it gets a little bit more tricky. But as Councillor Gent said, I think if we look at that as part of looking at the fund member survey, that would be a good way to take it forward. And also just bearing in mind, of course, that we're now transitioning from Brunel to a new pool, and this is one of the areas around how they deal with responsible investment in total that I think we're going to have to be very hot on monitoring, because it's a bit of an unknown quantity what we're going to get from the new pool compared to what we've got from Brunel. And it's one of the things that as officers we are focusing very strongly on in terms of the discussions we're having with LPPI.
Okay, excellent. Apologies. Yeah, George.
Oh, thank you, because those are the points I was going to raise myself. I just got on one sort of real question on page 10. It talks about Brunel's private market funds are able to take a full range of escalation measures within pooled vehicles compared to our segregated mandates. And I just wondered what that actually meant in practice. And the second bit, it went on to say, use the principle of explain. And I'm just wondering whether that explanation comes back to us, which it sort of fits in. And the third point is actually the obvious one about the transition that Mark made.
Mark, I'm going to defer to you to respond to that, please.
So I think what it's saying is, so Brunel's portfolios will have a number of segregated mandates where they have appointed managers and those managers then select individual shares that they buy or they sell. And within those, then Brunel can talk to the managers and make it very clear that these are our expectations of what we expect. With private markets in particular, and with passive equities as well, then we're invested in pooled funds, and that they have much less control over that, because the manager, we are invested along with other investors, and therefore we have a less proportionate sort of say in how those are invested. Having said that, I think a lot of what we're invested in private markets, Brunel do exercise a deal of influence over that nonetheless, and I think it's considerably less likely that they would be invested in anything within this subject area than a listed equity portfolio.
Does that answer your question, George?
About 99%. It just means that Brunel's policy is to avoid or explain. The question was, have they avoided? And if they have not avoided, have we received an explanation for them not avoiding?
Well, as I've said, I mean, in terms of companies that are actually based in Israel or similar conflict areas, I think that it's practically zero. I think it is zero. The exposure we have is in those pooled funds, principally listed equities, where there may be a small number of, I think there's maybe 1 or 2 Israeli banks that are part of the index, and therefore there would be some exposure to them, but it would be very, very minimal.
Thank you. Any other comments on the Brunel Oversight Board minutes? Okay, so happy to note those. Thank you. Moving on to item 8, the audit report on the pension fund statement of accounts 2024-25. I understand Mark and Pete Barber are going to comment on this.
If I just do a quick, very short intro, I mean, we've got Pete Barber from Grant Thornton who will take us through the audit findings report. But I would just, before he starts, report that the accounts were approved on the 24th of November by the audit committee. We had opinions issued on those accounts, which then enabled us to formally publish the pension fund's annual report, which you approved subject to external audit completion by the deadline, which is the 1st of December. So we are supposed to have published it by that point, and we were just able to publish it in time to meet that deadline. But I'll hand over to Peter.
Thank you, Mark. Thank you, Chair. Good morning, committee. So just by way of introduction, my name is Pete Barber and I'm a director with Grant Thornton. I am the appointed auditor for Devon County Council. I am deputising today for my colleague Beth Bowers, who is the appointed auditor for Devon Pension Fund. She sends her apologies but is unable to make the meeting today. So as Mark set out in his introduction, this is our audit findings report for the pension fund for 24-25. That report has been presented on 2 occasions, initially as a draft to the Council Audit Committee at the end of September, and then a revised final version of this report, the version you have in front of you today, was then presented again to Audit Committee a couple of weeks ago. And following that meeting on the 24th of November, we did issue a clean opinion, what we call an unqualified opinion on both the County Council's accounts and the pension fund accounts. And as Mark said also, we did provide that separate consistency statement that you will include within your annual report, confirming that clean opinion. The findings are set out in some detail, and we make no apologies for that because we are required to report in some detail on the work we've undertaken. And whilst inevitably the audit will find errors, I'm hoping when you read this report you do gain a lot of assurance over the arrangements that the pension fund does have in place to produce complete and accurate and timely accounts. You'll see that the deadline for producing these draft accounts was the end of June. The pension fund met that deadline and we made an immediate start. How do we undertake the audit? Well, in the case of pension funds, the most efficient way to do that is a fully substantive approach. So we audit the numbers and we check them back to detailed records and third-party evidence. We work to a materiality, and you'll see that we have a different materiality based on a percentage of the fund and our own risk assessments for the fund account and the net asset statement. Whilst we did find a number of issues, my reflection on this is, in discussion with Beth, that they are in the main presentational, and they're the notes. The fundamentals are absolutely there. We did not identify any material errors, or for that matter any figures that were remotely close to our materiality threshold. In the main they were presentation issues. So it is a very clean audit, and I think that is really the overall message I wanted to give in respect to this report. you will see that in terms of some of the testing on the investments, particularly the level 3 investments, inevitably you need to produce those accounts by the end of June. Often the information is not fully available when you are producing those draft accounts, and therefore you have to make some assumptions and some estimates. Our view is those estimates are reasonable. We have come in later on when there is more up-to-date information and been able to gain more certainty over the carrying value of those assets, and those differences are reported in here, but that is a timing issue, and in no way is it reflective of any poor arrangements on the part of the pension fund. So, Chair, this has gone through, as I said, the Audit Committee in some detail twice. I wasn't minded to say anything else in terms of the introduction, but I'm happy to take any questions if there are any.
Yes, for the benefit of members, this is for noting this item. There's no decision to be made, but do you have any questions for Pete? I have to say I'm very reassured by what Pete said and what I've read. Any questions from members? Roberto.
It looks like, having read it, just an operation that confirms that it's operating properly. And as far as I'm concerned, you've identified valuation level 3. Basically, it's errors of adjustment which make no difference at all to the approach. So I'm quite satisfied about it.
Thank you. Any further comments? Well, thank you, Pete.
Thank you.
You got off pretty lightly there, which is good.
Thanks for your time, committee. Thank you.
Okay, thank you. So that's noted, and we'll move on to item 9 on the agenda. Local government pension scheme pooling and governance consultation. As a committee, we are being asked to comment on the detail of the LGPS consultation, which is outlined in the report, and delegate the submission of a response to the Director of Finance and Public Value in consultation with myself, which will require a formal resolution. I'll hand over to Mark.
Yes, so on the 20th of November, the government published a technical consultation on the draft local government pension scheme regulations that will take forward their fit for the future proposals for the LGPS. So the report summarises the proposals, which are broadly in line with those contained in the previous fit for the future document published a year ago. The consultation is on 2 draft regulations, one on pooling requirements and one on governance arrangements. As expected, the pooling regulations will require the transfer of much of the responsibility for the implementation of our investment strategy to the pool, with the government having the authority to intervene and direct in certain circumstances. So in practical terms, this means that some of the investments that we have managed outside of the pooling arrangements with Brunel will have to be managed by the pool going forward. Also, the regulations will require us to revise our current investment strategy statement to reflect the new regulations, and that will need to be done by September 2026. That, I think, in the initial revision will potentially just be a question of mapping what we've currently got onto a new template and setting out the overarching aims of that, rather than undertaking a full review of the strategy, which we have done relatively recently. The regulations as currently drafted require all assets to be transferred to the pool within 21 days of when the authority first participates in the pool, and requires that an authority cannot participate in more than one pool for more than 28 days. These are both, I would say, impossible timescales for us to meet in terms of transitioning our assets from Brunel across to LPPI, and in terms of ensuring that we do that safely and efficiently and effectively, and minimising the costs involved with doing that. I think that timescale is very, very, very tight and virtually impossible. And I think that's one of the things that we would want to say in responding to the consultation, is that we need a bit longer than that. The governance regulations set out the requirement for each fund to appoint a statutory senior local government pension scheme officer. And it also sets out mandatory requirements for pension committee members to have minimum knowledge and understanding of pension regulations and investments, and that will bring the requirements on the committee in terms of knowledge and skills in line with those requirements that are currently in place for the pension board. So the consultation only came out literally a couple of days before the deadline for dispatch of the committee papers, so we didn't have time to put together a draft response to the consultation to be put forward at this committee for agreement. So therefore we would ask the committee to delegate the submission of a response to the Director of Finance and Public Value in consultation with the chair, but clearly any discussion by the committee this morning can be taken into account in compiling that response.
Okay, thank you, Mark. So let's take that first bit. Any comments? Yes, we do. Let's start with Jeff.
Thanks so much, Chair. Being a people person, not happy with the government telling us what we can and what we can't do, for starters. But with regards to the views of members through their unions, are the unions working in conjunction with the government and members, and how are the unions communicating with their members? Because I have not heard anything from the unions since I've been in this.
Well, that's a question that I certainly don't know the answer to. Yes, actually, Roberto, do you have a view on this?
I'm not commenting on that point because clearly the government has got its own view of how things are, but we have already expressed our reservations about Fit for the Future, and we see that the subject of getting all these pension schemes under even more control by central government is something that is not in the interest of the members of the fund, and we want to make sure, if we can possibly put the message across, that the government are racing forward with this one, without regard to the people who actually are beneficiaries and contributors to the funds, or elected committees such as this one, which actually at the moment have some discretion. It looks to me as the value of a committee such as this one in the whole sphere of things is actually reduced, and the accountability at local level in that case diminished. Therefore, it is a matter of serious concern that we are actually run roughshod to some extent on this one. It may well be a very good thing that long term we want to emulate the Norwegian sort of national pot, but I don't think it's the way we should be doing it. We should have a lot more consultation, a lot more time to look at it, and the government should be concentrating on what they should be doing, not what we are doing.
Yes, I think those are valid points, and I think that's certainly something that we can discuss and include in our submission. Henry.
Thank you, Chair. I think at this point, what we have to look at is how we're going to respond to this consultation, and the only practical way we can do that is to delegate it to officers as suggested, and I think they will draw the important points in our interest, particularly this point about the timescale being too short, and that could be damaging to the fund. So I think the points that have been made by Mark are relevant, and we should support him being responsible for responding. Thank you, Chair. I'm prepared to propose the motion as drafted.
Thank you, Henry. I have a comment. Let's take it from Mike.
I am concerned about the process just outlined. This is an important consultation, and clearly timescales are not on our side as regarding our committee structure. I would hope that at the same time at which the chair is consulted, when the report is ready to be submitted, that could be circulated to the committee so that any views the committee have can be sent to the chair prior to his meeting with officers to sign this document off. I'm a little concerned that on something as important as this, we're left out of the loop as an afterthought. And I think that is the way to proceed, that we should have a copy at the same time as yourselves. If we've got any comments, we get them straight back to you, or in the best Devon directly way, so that we have got a look into the document rather than just waiting till January, February and just noting it when we might have some other comments to make.
Yeah, let's take Mark's view, please.
Yeah, I'm very happy to do that. That's not, we've done that with past consultations. So yeah, very happy to do that. Clearly, we've got quite a tight deadline, and with Christmas in between as well, it doesn't help things. What I'll promise that we will try and aim to get something out by the end of next week, and then that then gives a couple of days for you to get back to us before because we will need to send this off pretty much before Christmas to send the deadline. Just on Roberto's point, I mean, the consultation asks very specific questions, but I think we can put a sort of forward at the start of it that captures some of your points.
George.
But I just echo Michael's point about cover the thing about the way that we can respond to that. I think it's a good point. I agree with that. The question I've got is, it was unclear to me whether new regulations concern the governance of the scheme in Devon and the rest, how it addresses or what changes that would make. And in particular, 3.3, I think is bullet point 5, is establish minimum standards for pools, including FCA authorization, etc. I don't know how that also would fit into the governance arrangements that we would have. So perhaps in the response we could cover that.
Mark, again, do you have a view?
So I mean, in terms of governance, there's the criteria that they're putting in is around. So there's the appointment of the senior LGPS officer, which is basically putting in statute the role that pretty much I fulfil. So that should be fairly straightforward. There is a requirement to have an independent person on the committee who has knowledge and understanding. Well, we have that already pretty much. So again, that's fairly easy to sort. The thing that will be that they're putting a lot of emphasis on is on making sure that the members of the committee have the relevant knowledge and skills. At the moment, we have a requirement where all the pension board members complete a self-assessment and under a toolkit that's provided by the pensions regulator, and I think we will be asking all of the committee to complete that. It's always been an optional thing that the committee can do. One of the things that we've been a little bit slow maybe in doing that since the elections, because TPR are revising their toolkit, and so we've been waiting for them to put a new one in place for us to use. In terms of the pool, I mean, we'll be talking about the government's arrangements in a later item for our specific pool arrangement. But while a lot of responsibility for certain things is transferring away from the committees to the pools, which is Roberto's concern, we'd still, as has been said, need to monitor very carefully what they do. And although in that responsibility will be theirs in a number of instances. So at the moment, if we think equities have gone over and we want to rebalance, then that's something that we decide. In future, what we would do is we sell the pool. Well, these are the percentage allocations, and we would give them some guidance around, well, if it goes more than 1% over or under, then we would expect you to sort that out. But then they would be doing that themselves. They wouldn't be asking us to agree that. They would just go ahead and do it because that would be within their remit. So there's a range of things like that that the pools will have the responsibility for. So we've got some private market assets where we've done that outside of the pool. Those will have to be managed by the pool, but it'll still be up to us to use the influence we have to make sure that they're doing things the way we think they should be done. And I think that's going to be the key bit going forward, is to monitor that and actually say, not sure what you're doing there. Can you just explain what that's all about? And again, the way they deal with the responsible investment issues is something else that we're going to have to be very hot on monitoring and challenging in terms of the way that they're managing our investments.
Yes, thank you, Mark. And I think, you know, we're going into we're going into a new pool with more funds than the current pool has itself, and this is a real opportunity for us to influence how that pool is set up and operates. Adrian.
Thanks, Chair. I just wanted to double up what Mark was saying about training. Or there are lots of different options for training. As I know Mark knows, some councils get managers to do it. There are lots of conferences that councillors can go to, and of course, Anthony Stroke Apex will do it as well. So,
Roberto, last question, please.
Yeah, it's really again a question of the pools, and I know we are coming to it later as a paper because we are obviously transitioning there. But my critical point is that at the moment on Brunel, we've got scheme members represented, and we don't think the government has grasped that particular point at all. And it's quite surprising for a Labour government not to do that. So as far as I'm concerned, if it's possible, in replying to the government, we make sure that we introduce that element in it. And I will raise this one specifically when we come to the Part 2 paper, because I think it's fundamental for maintaining, particularly the people who are doing the investment on our behalf, a link with the people who are responsible.
Yes, thank you, Roberto. And Fred will have noted that, and that will be fed in. Henry has moved this based upon the wording here that we delegate the submission of a response to the Director of Public Finance and Public Value in consultation with the Chair. Can I have a seconder, please? For those online, we're playing with a microphone.
It's usually turning them on rather than turning them off.
I'll carry on. Jeff seconded, so we shall move on to the next item. Okay, so moving on to item 10, the investment management report. Our requirements here are to note the investment management report and to note compliance with the 2025-26 Treasury Management Strategy. There's no resolution required.
Going to change that.
Okay, and so Mark has a lovely surprise for us. Over to you.
Well, I'm not sure about that. So this is the regular report that we bring. So that the table on pages 65 and 66 of the report shows the current value of the fund split between asset classes with the allocation of each asset class compared to the target allocation. So as at the 30th of September, the fund value stood at 6.67 billion, which represented a total fund return of plus 4.8% over the quarter and a return of 9.1% since the end of March. As agreed at the last committee, we have moved 50 million from equities to index-linked gilts, although part of that hadn't been completed by the quarter end and was done at the beginning of October. But then, given the continued overweight to passive equities, we moved an additional 40 million to index-linked gilts, which I agreed in consultation with Anthony as our independent advisor. We have discretion from the committee to move up to 50 million within the quarter. Beyond that, and this is the little surprise, if you like, is private market assets do remain underweight, but over the last few days, we have had a call on our current commitments of 20 million from Brunel for their private equity portfolios and 22 million from Gresham House for their affordable housing fund. And therefore, we would propose that we fund just over half of this from the cash that we hold, but that we would ask the committee to approve a further 20 million redemption from the passive equity allocation to fund those private market calls. The graph at the bottom of page 67 then shows the investment performance over the last quarter, 3 years and 5 years, compared to the fund benchmark and the local government pension scheme average. The fund benchmark is a weighted average of the benchmarks for each of the individual asset classes. And while the fund's investment performance is below our benchmark over each of these periods, it is ahead of the LGPS average over all periods except for the last quarter. And I think that may well be adjusted in due course. With the exception of emerging markets, the active equity portfolios have continued to underperform, which is the major reason why we have underperformed against benchmark. Just going back to a discussion we had in the pre-meeting, what the biggest underperformer has been our sustainable equities portfolio, and I think there has been, to coin the phrase that Councillor Rake used in the pre-meeting, a discount for investing on the ESG side as opposed to investing more widely across the markets. We have seen particularly good performance from oil companies and so on and so forth since Ukraine was invaded by Russia, and we are significantly underweight to those, as you would expect with our responsible investment focus. Equally, the big thing that has driven forward markets, as again we discussed earlier, is the Mag 7, and they have led the way, and pretty much most active equity portfolios will be underweight to those Mag 7 companies, because they are such a big part of the market, and you'd be putting so many of your eggs into one basket, if you like, to be overweight to those. So that also contributes to the underweight. And sustainable equities portfolio in particular is looking at things that are positively sustainable rather than just avoiding the bad stuff. And again, that means that they would be significantly underweight to the big 7 tech companies. Having said that, our passive allocation will probably be slightly overweight to them because it is a passive index, but it excludes some of the bad stuff such as oil companies, which actually means then the percentages of everything else will be slightly higher, which is why the passive fund has done a lot better than the active funds over the last few years, really. Then there's graphs on page 69 and 70 that look at the impact of exchange rates on our investments and our hedging strategy. If we go back 3 years to September 2022, that was the point at which sterling was at a really, really low value following the what was called the mini budget of that year. And so ever since that point, we've seen the value of the pound go up against most major currencies because it was such a low point. Our hedging strategy works better when it goes up and down more, because we work on the basis of we hedge more as it goes up than we do as it comes down by changing the hedge ratio. But given that certainly over the last 12 months it's hardly moved at all, we haven't been changing the hedge ratio, and therefore a fully hedged strategy would actually have worked better over the 3-year period. But if we looked at a longer 5-year period, then it would definitely have worked in our favour. Section 5 of the report then looks at the budget position for 25-26 with an analysis shown on Appendix 1 on page, not on page that, the page which it's on, which page I've written in my notes, page 77. The only significant variances we anticipate at this stage are an income from the proceeds of class actions, which we talked about at the last meeting, and the value of transfers into the fund where people have transferred their pension fund membership across to us, where we've seen quite a large amount of that happening over the last 6 months. Section 6 of the report then shows the cash management over the quarter. We still have a reasonably high level of cash, given that we have been able to achieve relatively risk-free, good level of interest rates. That is something that we will need to look at going forward with the new pool in how they manage that. And again, talking to one of the points we were talking about earlier in terms of cash flow, making sure that we have the cash that we need to pay the pensions, as we anticipate that the gap between the contributions coming in from employers and employees to the pensions paid out will be growing slightly over the following years. And then the final section of the report details the voting and engagement activity over the last quarter. It's a less busy quarter for company meetings than the previous quarter, but details of what has happened are within the report, and also the Local Authority Pension Fund Forum quarterly engagement report. So happy to ask any questions, and we would ask the committee to approve the redemption of a further 20 million from the Paris aligned equities portfolio to fund the private market calls.
Thanks, Mark. I'm going to come to questions in a moment. If you just give me a second to refer to the clock.
Yeah, so just in terms of the resolution, if someone's happy to, in the report, that's only a recommendation. So as long as someone moves and seconds it and it gets voted on, you don't need to approve the moving of it, if that makes sense.
Fine, thanks for the clarification. Yeah, let's take comments. Simon.
Thank you, Chair. Just my rough maths suggests that what you're proposing in terms of the rebalancing or funding the calls in the private holdings will put us pretty much exactly back on target allocation. Is that more or less right?
It's about
within
not entirely, I don't think.
Not
no,
but
I think
much,
I mean, if we're
closer.
adding another 42 million, that's about two-thirds of a percent. So that'll put it up by about 0.6. So that's, and it's 2.5 below. So it will still be a bit under. But that it's one of those things where you can't move the dial quickly because we are dependent on, we've made a lot of commitments to private markets that have yet to be called, and we're dependent on those funds to call those funds when they identify the right investments for them. So it's not, we can't move that dial quickly. So we just have to move it as and when things happen. I mean, one thing we would normally be looking at this stage is whether we need to commit more to the private markets going forward in order to achieve our objectives. That's going to be a bit trickier because of the transition of pooling arrangements as to how that's going to be managed going forward. So that's one of the things that we will need to be discussing with the new pool as to how they're going to manage their private market commitments.
Happy with that, Simon?
Yes, I mean, I think that this is where the change in pooling arrangements really bites. If it inhibits or restrains our, what we would otherwise do, then that's where it gets really annoying.
Any further comments?
I mean, just so firstly, the move to take some top slice of equities, obviously, I'd be comfortable with, given my earlier comments. I would second what Mark's saying about sustainable. It's a lot of quality, i.e., sort of steady, consumer staples. Those kinds of things have really not done well in this current market environment. So there's the universe of sustainable funds that investment consultants look at has underperformed by 7-8% in the course of this year. So it's a common problem, but not to sort of obviate it, but it's a common issue. I just wanted to make one point about the hedge, which I think is it's a good strategy to have your sort of your variegated hedge depending on level of currencies. And apologies, Mark, that I didn't raise this in our earlier call, but it's a thought that the hedge is the one area probably that you have a significant derivative exposure, i.e. you're probably doing it through forwards or something like that. And that can cause material cash flows if there are sharp moves in currencies. So just sort of that's not that it's an issue short term, but in an environment where there's more volatility, that's probably something that you just sort of should think about and ensure you've got adequate flexibility to cover that should it happen.
Just on that, I mean, the property portfolio is hedged through forward currency derivatives, and that is something that will have an impact on cash flow. In terms of the equity hedge, it's purely on the passive funds, and it's implemented by Legal and General. So they have a hedged sleeve and an unhedged sleeve, and so it's all managed within the fund, so we don't have to worry about cash flow, which is we did consider, and Brunel were advocating at one stage that we used a slightly different approach to achieve the same objective, but my concern with that was that then we would have had to manage the cash flows ourselves, and that was a risk that I felt was not worth looking at, and therefore we've kept with the strategy whereby it's all done by Legal and General within the fund that we're invested in.
So the question would be for Legal and General how they manage it, and as much as that's back to the point of selling things at the wrong time. That is, I mean, it's not a huge amount, but it can be a material percentage because if you're hedging 50%, by definition, you've got a significant dollar amount of capital swinging around in that hedge. So,
great, thank you, Roberto.
Yeah, just to reassure members of the committee, the longer term fund performance summary, which you've got on page 67, show us above the LGPS average. So I'm quite satisfied the fund's doing very well. And the second thing is, when you look at the engagement data, it's very nice to see that we are continuing with the ESG questioning of companies.
Thank you. Okay, so I think we're happy that this has been noted. We have a decision to make. Fred, could you just clarify what the decision is?
So I've got, and this is
on there.
okay. So it would be, yeah. So the noting doesn't require a resolution, and then to approve the redemption of a further £20 million from the passive Paris-aligned equities portfolio to fund private market calls.
Okay, I think we're happy that we've discussed it. Is somebody prepared to move that? Simon. Somebody to second. Mike. Thank you. So we'll move on to item 11, private debt report. Do we have a vote? Yes, that's a show of hands. Yes. Show. Sorry. Yeah, let's do it properly, shall we? Good idea. Excellent. Right. Private debt, item 11. Sorry, that vote was carried. We have a decision on this item as well. We're being asked to approve continued investment in the GoLub Capital Partners International Fund 11 through the proposed extension funds, and Mark is going to explain all.
So the report summarises the current position with the two private debt funds that were invested in prior to the advent of Brunel. So our private debt, most of our private debt investments are through Brunel. These two funds we invested in before Brunel was fully up and running. With private debt funds, essentially what you do is you provide the capital, they loan it out to companies, we get income from the interest they charge to those companies, and then as those companies repay those debts, they then return the capital to us, and eventually we get to the point where there's nothing left. In certain circumstances, depending on the life of the fund, they can then make new loans with some of the loans that have been repaid. So the Arkmont Fund, which is a UK European fund, is nearing the end of its life, and as the remaining loans are repaid, they will return capital to us, and they've already returned a significant amount, as the report shows. The fund has performed well, and we expect all capital to be returned within the next year, although there is the potential for further extensions, and that may be where they agree for a company that they've loaned money to take a little bit longer to repay it. But if that happens, then we get more interest. The Golub Fund, which is a US-based fund, has now approached us about maintaining our investment through an extension fund that would continue to make new loans. So the fund has performed well and provided us with high returns, and I'm confident that that would continue if we agree to extend the investment. They employ a slightly different strategy to Arcmont in that they also borrow money to supplement the capital that we've put in, which means that they can loan out more money, and that helps them to achieve higher returns. It brings a slightly higher level of risk, but nevertheless, for that risk, we've gained some very good returns. So they've asked us if we would extend our investment through this extension fund. The alternative would be that they would return all our capital over the next year. Our private debt allocation is already under the target level, or is currently under the target level, and if all the Golub capital were to be returned, then we would be more significantly underweight, as the rate of progress of the current Brunel portfolios in terms of drawing our capital is likely to continue to be relatively slow, and it will be some time, as we've already said, before the new pool is ready to provide some new private debt investment opportunities. Going forward, under the Fit for the Future proposals, the decision that we're asking the committee to make will actually be one that the pool will make going forward. But we haven't got to that point yet, and we still feel that this is an appropriate decision for this committee to make at this current point in time until we are fully onboarded by the new pool. Cornwall and Gloucestershire are also invested with Golub, and they are also deciding whether to extend their investment, and there may be the opportunity for fee savings if all three agree to extend. Therefore, the committee are asked to approve continued investment through the extension fund. I think Cornwall and Gloucestershire are both minded to extend, but I can't really confirm that because they haven't made a decision yet.
Thanks, Mark. Question from Roberto.
I think this is a very straightforward one. Can I move it?
Show of hands. Job done. Thank you very much. Moving on to item 12, Peninsula Pensions Administration Update and Performance Statistics. And Rachel Lamb, I believe you're giving this report.
Thank you, Chair. Good morning, everybody. So this is the usual quarterly report around the administration team, and explaining the different areas that we've covered during the last quarter, and also our performance, covering our performance. So straight into the performance. The quarter that we're talking about here is July to September, 1st of July to the 30th of September 2025, during which period we had 6 compliments that were nicely written out. Member of staff was even given a bunch of flowers this time, but I didn't write that in the report. The performance for this quarter was 95% overall, in line with the disclosure regulations, and also 95% for the high priority areas. All of this is outlined in Appendix 1 with the full breakdown, which is on page 102. Just to confirm, previous quarter was 95% and 96% high priority, so a little bit better on the high priorities in the previous quarter. Appendix 105, Appendix 105, page 105, Appendix 2 outlines the longer term performance and shows the remaining tasks outstanding, and also the tasks that are on reply due. And you might notice there that there's been a bit of an upward trend in September. That was, to be honest, totally expected, because September has become on our trends one of our months where the levers information that we get through increases, and that's down to mainly schools and academies where they issue short-term contracts as opposed to long-term. So at the end of August, we get a peak where the contracts have ended, and then we get a lot of rejoiners where they've been given a new contract. So that was to be expected. Also over that quarter, we had the McLeod remedy work, which was our first tranche to hit a deadline of the 31st of August. For those members that were actually in receipt of a pension and were due monies. So though that was achieved, we did the recalculations, and any pensioners that were in receipt of a pension already that were due monies at that point have had their monies. Appendix 3, which is on page 106, just shows the amount of work that we've received over the last 12-month rolling period compared to the same period in the previous year. You will see that again is increasing. There's a couple of reasons for that. One of the reasons is the amount of leavers that we receive because of the short-term contracts almost shows that there's more, because we have to do those individual calculations and then rejoin records as opposed to rolling through in the scheme. Also, we have got better at recording and capturing all types of work. So there's work in there, different workflows in there. The new starters is the main one that are now visible on the reporting, which weren't previously. So they're showing there too. So just mentioning McLeod again, with McLeod, we did achieve that with the pensioners, and the team are now moving on to remedy for any other scheme members that are not actually drawing their pension. The deadline for that is the annual benefit statements for next year, for 2026. So the date is 31st of August 2026, but we are working to try and achieve as many of those recalculations before the 31st of March 2026 where we're able to. We are reliant, I think I've mentioned before, we are very reliant on, with some of those recalculations, getting information from other parties, so from other administrators. If they've transferred into ourselves, they need to give us some new data, including McLeod, and transfers from third parties, external transfers. So we've written to the majority of those and asked them for the data, and we're just waiting for that data to come back in. Pension dashboard is also mentioned, just to give you an update on that. So the connection deadline for pension dashboard for ourselves as local government was 31st of October 2025, and we managed to connect the 11th of September 2025 for the main scheme benefits. That doesn't mean it's live and available, but it's now available to do testing nationally with others. So we've achieved that deadline, which I'm pleased to say, and a little bit early. Annual benefit statement. So this is again an annual summary, just so it's outlining the figures that we've issued across active members and deferred members. And there was just 13 active member statements that we couldn't issue because we were awaiting information from employers. So out of the grand sort of total number, it was a tiny percentage. And that pretty much is my overview. I'm happy to take any questions.
Thank you, Rachel. That was all very positive. I have a question myself. It's on page 104 in Appendix 1. Just looking at item 4, which is death, period 1 and period 2 is at 83%. I'm just wondering why that figure, why 83%, why isn't that higher?
Let me just get that page and have a little look. Yeah, the category of deaths is a very difficult one, because obviously they're high priority and we want to pay them straight away, but with wills and solicitors and probate, they quite often take a lot longer than just us being able to do the calculation and pay out. And then sometimes we have unfortunately disputes with families over who should get different monies when there's a death grant involved as well. So that isn't as high as we would like it to be. And actually there is some work going on, or has already happened actually, where the team have gone through any that are outstanding and have tried to call as opposed to write, just to try and get hold of individuals and find out what the hold up is to get the monies out. So it's kind of doing as much as we can on those.
Okay, understood. Any questions, Simon?
I don't think you were in the room earlier when there was discussion of potential impact of local government reorganisation on just the volume of work for the administration. Are you confident that you'll have capacity to deal with, you know, perhaps early retirements and leavers and starters kind of all over the shop?
Yep. So we had similar with Somerset Council. And yeah, similar, we needed lots of quotations, and we have an employer and communications team that also do calculations as well as our main benefit teams as well. So we just bring everyone together that's able to do them at that point in time to resource it. So I would envisage the same plan.
Thank you.
Mike?
It's a question on the McLeod aspect.
Yes.
You stated that in the report that 263 members are those already in receipt of pension. I just wonder, out of curiosity, what range of extra payments were these people receiving? Have you got any indication of how significant or insignificant it was?
I can give you sort of offline some more data on that if you like, but it's not big amounts. Is the overall summary, but I'm happy to give you more.
Prosecco rather than champagne, then.
Yeah, that's right.
Roberta, a nice Chianti, perhaps?
Well, I think it's a very good report and it looks very satisfactory. I think you ought to congratulate the staff for keeping it that way. And we look forward to resolving the issues that have been raised. But I think we have full confidence in you. Thank you very much.
Thank you. I'll pass that on to the team.
Thank you very much. So your reports have been noted. Thank you. But I think we're going to hear from you again now on item 13. Am I right? This is the Peninsula Pensions Employer Performance Report.
We are indeed. I nearly
Okay,
forgot.
away you go.
Right, let me get to that page. Yeah, so we separated the report out. That's what's thrown me. Originally, it was all in one performance report. The employer performance is now separated out, just to make it a bit clearer. So the performance covers the same period, 1st of July to the 30th of September. And it's linked in with the pension funds administration strategy and the requirements on ourselves as administrators, and also the employers, the expectations on the employers as well. So Appendix 1 is just giving a summary so that you have an overview of the number of leaver notifications that we received during July to September. And Appendix 2 is effectively the timescales involved in receiving that data. So our focus so far with the introduction of the pension administration strategy has been to get in line any data that we've got outstanding from employers to bring it into the timescales that's agreed in the strategy. And our second area of focus, which we've not done yet, but what we're planning is then to look at the timescales involved in getting that data and bringing employers more in line with the expectations in the admin strategy, and educating a bit more so that the employers understand if they delay getting data to us, we then delay doing calculations, and ultimately it's the member then that is the person that misses out. So it just outlines here that there are 2 employers that have unfortunately had fines. So we did a 3-month lead-in advising what the fine would be if they didn't get the data to us by that 3rd month day. Then we did a second reminder. Then on the 3rd month, we still hadn't had the data, so there was a fine issued. So we will be monitoring those sort of going forwards, and also to ensure that the payment comes in. But they are our first fines that we've issued under the admin strategy. And that, I think, is a summary. And again, happy to take any questions.
Thank you very much. Simon.
It just seems, I mean, with these delinquent employers who are sort of tardy in getting the information to you, 100 quid and 200 quid seems really not likely to particularly correct them in their ways, especially if we then have to spend time and effort making sure that they've paid up. I mean, who set the level of these fines, and can we give them a sterner rap over them, of course?
So the level of fines was agreed last year, last April, and they are in line with what other administrators nationally are doing as well. So it was felt that as this was just the introduction, this is probably, it's better to go in line than suddenly do a higher level. Also, the fines do allow for another fine. So if that's not paid in a timely way, it will accrue. And some of the areas like annual returns accrue daily. So that's kind of first stage fine.
If I just add to that, one of the things that we were finding before we introduced this was that where we had some employers, largely contractors who were operating across, say, across the southwest, that because Cornwall and Dorset both had systems of fines in place, that the contractors' payroll providers would prioritise sorting out anything to do with the Cornwall fund or the Dorset fund over our fund, and therefore we were sort of tail end Charlies in getting them to do their work. But now we've got a consistent level with the other funds. We found that they're not doing that so much, and that we're getting things in. And so I think that was a key motivation for introducing this, was just to make sure we weren't being sort of deprioritized against other neighbouring funds.
Yes, and this was a point I actually raised with Mark as well. And you mentioned there's a sort of reputational factor. It's not just the fact that it's £100, but actually it's their reputation that they've got to be mindful of. Yes, George.
Yes, I had two questions. One following on from Simon's, a fine as opposed to a recovery of the additional administrative costs associated with it. I just wondered how far out of line that is, but also follows on to page 111, reasons for leaving and average days to complete. I just wondered how much of those is due to us and how much of those are due to our employers, not, as you refer to, not giving us the information.
So the chart on page 111 is the notification timescales for the information to come into us. On the previous report, the timescales overall are shown on Appendix 1. So what page was that? Page 102, I think, from memory. Sorry, just going through it. Yeah, page 102, Appendix 1 at the very top. There's average timescales. So this is average over that period, which splits out where the timings are. So it shows that total days from member actually going until they receive their payment is 34 days. And the number of average days after retirement to receive the information from employer is 5 days, but then the time it takes for us to send that information out and for the member to return it is 29 days. So it's difficult to separate our bit out because obviously we're waiting for the member to give the forms back as well, but that hopefully gives you an idea of the split a bit better.
Oh, yes, it was just trying to find, if you like, the root cause of this, and you've pointed me to that now. Thanks.
Thank you. Any further comments, Rachel? Yes, Simon.
Taking my stern hat off, I wonder, I mean, as well as fines, where you have got persistently delinquent employers in terms of timeliness of information, do we also engage with them and say, you know, what's the problem here, and can
Yes, is the answer. Absolutely. And that is our next focus. It's moving from actually getting the data to getting those timescales down. So yes.
I think one thing that's been worked very successfully is that we send out letters to people telling them that if they haven't sorted it by a certain date, then they're going to get a fine. And generally that means that we get the information.
Great, thank you very much, Rachel, for attending and for those reports. Everything's sounding great. And let's move on. So that's noted. And we'll move on to item 14, which is a relatively brief fund member survey update from Mark.
Yes, so this is just an oral response. We had been hoping that we would be bringing you back a report at this meeting with the results of the survey, and that was our intention. However, following the decision to send out the forms by post to those who have opted out of electronic communication, we have been inundated with a huge number of returns, many more than we anticipated, and because they're on a bit of paper, they then have to be input, and it's taking a lot of time for us to get all of those results input. So we know that last time we had just over 4,800 people complete the survey when we only did it as an online survey. This time we've only had just over 2,000 completing it online, so that's less than half of last time, which is disappointing. But we've got at least that number that have come back by post, which we're having to deal with. So we should be on track so that we can bring those reports to the February meeting. We might see if we can get them to the pension board meeting as well before that, but that depends on our rate of progress with inputting all of the data that we've received. So that's where we are.
Thank you, Mark. These surveys are done every 3 years, and I think it's worth remembering that some of us may not be here in 3 years' time with LGR, so who knows? But actually, I think there is a financial cost not only of sending these things out, having them printed, and then using postage to get them back, but also the inputs. And we do need to bear that in mind and compare the previous response from an online, when online was the only option available, I guess.
Just as a thought that when we do this next, it might be worth considering getting a professional polling company to do a proportionate sort of scientific survey of members rather than doing it this way, because given the cost of posting it out, it probably wouldn't cost that much more. And you will have to bear in mind when we get the returns that there is always going to be a responder bias to these things, that people who have something they want to say are more likely to respond than people who are happy.
Having worked with survey companies like that, they don't get out of bed for less than 10 grand. So yeah, we'll figure that out, Mike.
What I was going to raise, if we're trying to make comparators, if the system was different prior to that and was online only, it would be interesting to see whether the range of responses, shall we put it politely, from the online ones differ to any extent from the ones that you're receiving by post. Whilst you'll have a global overview of the 4,000 or 5,000, it might be useful for the committee to understand if there's a breakdown difference.
We will certainly look at
between the two elements, because that could be important.
We will certainly look at that, and I would anticipate that the majority of the ones returned by post are going to be pensioner members, whereas you'll get a broader spread of actives and deferreds and pensioners from the online return. So that may make a difference.
George, please.
I just wondered if you will have the data to see if there's any displacement of online response to postal responses. I don't know if you have that. We'll have that data from the survey.
Well, it shouldn't be that way, because the people that we posted it to are the people who've opted out of electronic communication. Effectively, I think we disenfranchised them last time because we just did it online. So if we don't have an email address for somebody, then they wouldn't have had the opportunity to respond it, which is why we did it this way this time.
Roberto, please.
I think overall the exercise is proving its worth. We are consulting the members, both the contributors and the deferred and the pensioners. As far as the pensioners is concerned, with my experience at the Southwest regional level from my union, we have a fair number of people that are not able or cannot or have not got the equipment to respond electronically. So in a way, we're actually doing the job of finding out how it works, as already has been indicated. And I think it's very commendable. We should do that, even though it's costing us money. But I did hear at the last committee that we have an alternative way of communicating if we fit in with Rachel's system on the annual sort of circulation. So I think it's probably worth doing that as well as considering an organisation that would do a polling arrangement. But I think the important point at the moment is for us to demonstrate as a committee that we are committed to having this consultation arrangement working all the time, because that's our role as well as that one of investing the money.
Yes, thank you. I don't know if there's a way for in 3 years' time for these comments to be sort of flushed out the system and influence our decisions, but it would be great if that was possible. Any further comments? Okay, so that item's noted. Moving on to item 15, dates of future meetings. This is for noting. I'll read through them so that we have them. 27th of February, 26th of June, 18th of September, 27th of November, and 26th of February. We are now going to move into part 2, which will be in the absence of the press and public. I think this is a good time to have a 10-minute break while we sort out the technology and whatever might be required.
That's fine. We do need a formal mover and seconder for the recommendation to move into part 2 and a vote on that, if that's okay.
Simon propose.
I propose we move into part 2, Chair.
Michael's second. Show of hands. Okay, that's